Loss of discipline is the silent killer of every trading account. It rarely begins with a spectacular failure. It starts with a thought so small you almost miss it. Just this once. Just this once I'll move the stop. Just this once I'll add a little more size. Just this once I'll ignore the plan and trade on instinct. That single exception opens the door to every major loss that follows. Discipline is the backbone of speculation. Without it, the best charts and indicators are nothing but decoration. You can own the finest tools in the world, but if you can't follow your own rules, the market will drain your capital while you watch. Picture this. You've prepared carefully, set your entry, risk, and exit. The trade triggers, price moves your way, then suddenly reverses. Your stop is 10 points below, but fear whispers, give it more room. You lower the stop. Price dips again. You lower it once more. Soon the stop is gone entirely, replaced by hope. The market is now in charge, and you've surrendered the only weapon that protects you, discipline. I've lived this story. Every heavy loss in my career began with a small betrayal of my own plan. Not the market's cruelty, not bad luck, my own weakness. The tape warned me. I ignored it, and the market, being the harshest teacher alive, collected tuition. The market punishes pride but rewards obedience, yet obedience feels dull. Discipline feels dull, and dullness is what most men cannot endure. They come to the street for excitement. They crave action, noise, motion. They want to feel alive, not patient. But excitement is expensive. It costs capital. It costs sanity. It costs careers. Think of discipline as a chain of steel links. Each rule is a link. Size your trade, set the stop, cut losses fast, wait for confirmation, follow the trend. Every day you keep those rules, the chain holds. Break one link, and the chain snaps. The break never looks fatal in the moment. It feels like freedom. But the cost shows later when the market takes advantage of the weakness you invited. Many traders think the hardest part of trading is spotting trends or timing entries. They're wrong. The hardest part is sitting still when every nerve screams to act. Discipline is the art of sitting, of letting profits run, of letting trades play out, of letting opportunities mature. Most men cannot sit. They tinker, chase, and meddle. In that restless activity, they break the very rules that protect them. The market tempts you with two great lies. The first is fear. Get out now before it's too late. The second is greed. Stay in forever. The move is just beginning. Both whispers are designed to break discipline. Fear makes you cut winners too soon. Greed makes you hold losers too long. Both lead to the same place, loss of capital and loss of confidence. Capital is your army. Every dollar is a soldier. Discipline is the general that keeps those soldiers alive. Would you send troops into every skirmish just to relieve boredom? Would you ignore orders because a single battle looks exciting? Of course not. Yet traders do it every day. They risk the army for the thrill of action. They call it intuition, but it's nothing more than indiscipline dressed as courage. Consider the man who vows to risk no more than 2% on any trade. He keeps the rule for weeks. Then a stock flashes across the screen. A can't-miss setup. He doubles his size just this once. The trade turns against him. The loss is bigger than planned. He hesitates to cut because the pain is larger than expected. Now he's outside the plan entirely, hoping instead of acting. The first crack in discipline has opened, and the market pours through like water through a broken dam. Discipline isn't something you set and forget. It isn't a box you check at the start of the week. It's a living practice renewed with every trade, every tick, every decision. It's the quiet voice that says, follow the plan, while the crowd screams to do otherwise. It's selling when you'd rather hold. It's holding when you'd rather sell. It's waiting when you'd rather trade. Many believe discipline is a single heroic act, but it isn't. It's 1,000 small acts. Closing a position when your stop is hit, even if you're sure the market will turn. Staying out of a setup that almost meets your criteria, but not quite. Resisting the urge to chase a runaway stock. Each act feels trivial in isolation. Together they build the only edge that lasts. The street is full of clever men who can read every indicator, predict every headline, and recite every earnings estimate. Most of them will lose their stake, not because they are ignorant, but because they are undisciplined. The market doesn't pay for cleverness, it pays for control. Discipline is control over yourself, not the market and not other traders. Can you follow your own orders when the tape mocks you? Can you stand aside when every fiber of your being screams for action? Can you accept a small loss without the need to win it back immediately? That is the measure of an operator. Loss of discipline rarely looks like a catastrophe in the moment. It feels like flexibility, like adapting, like genius. It flatters you even as it destroys you. The first break feels small, the second easier, and soon the rules are gone. Then the real damage begins. Guard discipline as you guard capital, because in truth they are the same thing. Lose either, and you lose the game. Keep both, and you can weather any storm. Before you learn a single chart pattern, before you place another order, understand this. The market does not beat you. You beat yourself by losing discipline, and the market, patient as the sea, waits for that crack in your armor. Don't give it the satisfaction. Discipline is tested most fiercely in the heat of the session, when fear and greed collide with flashing prices. Fear shows up first. A stock dips against you and your mind races. You imagine disaster in every tick. Your heart pounds, your palms sweat, logic fades. You forget the plan and grab for the exit just to stop the discomfort. A small dip becomes a full liquidation. You call it risk management, but it's panic wearing a clever mask. Greed arrives disguised as confidence. Your trade is working, profits grow, and suddenly the plan feels too small. The target looks close, but you tell yourself, why settle for a small win when a fortune is a few points away? You cancel the stop, stretch the target, add more size. What began as a disciplined trade turns into a gamble. Fear makes you sell too soon. Greed makes you stay too long. Both drive you to the same destination, loss of discipline. Every market movement tempts you to react. A spike upward whispers that you are missing out. A sharp drop warns that you are in danger. The tape becomes a siren song, luring you off course. But the tape is not your enemy. Your own impulses are. The market will always move. Your job is to follow your plan, not every tick. I remember sitting in a bucket shop early in my career, watching the board boy change prices. Each number felt personal, as if the market knew my position and moved to torment me. When prices ticked against me, I wanted to snatch at the trade, protect the little I had. When prices jumped in my favor, I wanted to double down and chase the thrill. Those urges were strong enough to feel like commands. They weren't. They were the oldest traps on the street. Discipline is the power to ignore those false commands. It is the quiet refusal to be ruled by adrenaline. It is selling when your stop is hit, even if every nerve begs for just one more minute. It is holding when the trend is healthy, even as your mind invents reasons to quit. Discipline is not about killing emotion. No man can do that. It is about recognizing emotion and acting in spite of it. A soldier on the battlefield feels fear, but still follows orders. A trader feels fear, but still follows the plan. The difference between a professional and a gambler is not the absence of feeling, it is the mastery of action. Ask yourself how emotion enters your trading day. Does a winning streak make you reckless? Does a single loss push you into revenge trades? Do you check your account every few minutes, letting each fluctuation dictate your mood? Each of these habits is a small surrender of discipline. Each one invites the market to exploit you. Revenge trading is the purest example. You take a loss, feel the sting, and immediately seek a trade to win it back. You tell yourself you are being proactive. In truth, you are throwing good soldiers after bad, sending capital into battle without a plan. The market feeds on this behavior. It waits for the frustrated trader who acts on anger. It punishes him with another loss until his account is drained and his spirit broken. Overconfidence is just as dangerous. After a string of wins, you feel invincible. You forget that the market owes you nothing. You start increasing size, loosening stops, skipping confirmations. You think you have insight when all you have is luck. Then the inevitable losing streak arrives and wipes out weeks of gains in a single reckless session. Discipline is the guardrail that keeps these emotions from driving you off the cliff. Without it, fear and greed take the wheel. With it, you can observe their pull without obeying it. You can feel the fear and still cut a loss calmly. You can taste the greed and still take profits according to plan. Many traders look for salvation in new indicators, faster news feeds, or complex algorithms. They believe more information will protect them. It won't. Information without discipline is just more noise for fear and greed to exploit. I have known men with perfect systems who still lost everything because they could not control themselves. And I have known men with simple methods who prospered for decades because they followed their rules with iron will. The market rewards discipline, not brilliance. You do not need to outthink the crowd. You need to outweight and outcontrol it. Think of discipline as a muscle. Every time you follow your plan, despite temptation, you strengthen it. Every time you break a rule, you weaken it. The market will test this muscle every day. It will bait you with sudden moves, false breakouts, and quick reversals. It will tease you with near misses and almost setups. Each test is an invitation to abandon discipline. Each refusal is a victory. The danger is not that you will feel emotion. It is that you will let emotion dictate action. Acknowledge fear without fleeing. You can admit greed without chasing. You can feel frustration without striking back. The professional feels everything and obeys nothing except the plan. Discipline is not a single heroic decision. It is a constant practice of small, unglamorous choices, sticking to position size, honoring stops, waiting for confirmation, walking away when no trade is present. These choices rarely feel dramatic. They often feel boring. But boredom is where wealth is built. Excitement belongs to the losing side. Ask yourself a hard question. Do you seek trading because you love the thrill or because you love the craft? If you crave excitement, the market will give it to you, along with losses. If you crave mastery, the market will eventually reward your discipline. Every great operator I knew shared one trait. They were calm in victory and calm in defeat. A winning day did not inflate them. A losing day did not break them. They followed their plan with the same steady hand regardless of outcome. Their discipline was not dependent on results. It was who they were. Make discipline your identity, not just your tactic. Be the trader who follows rules as naturally as breathing. Be the trader who values capital over ego, process over excitement, longevity over quick thrills. The market will still tempt you. It will still scare you, but it will never own you. Discipline is built long before the opening bell. Preparation is the quiet work that gives you strength when the market starts to roar. Most traders skip this work and then wonder why they lose control. You cannot expect to remain disciplined in the heat of battle if you walk in unarmed. The best operators treat every session like a campaign. They review the battlefield before the first shot is fired. They study the tape from the previous day, mark support and resistance, and set entries, exits, and risk limits in cold blood while the market sleeps. When the bell rings, the plan is already written. All that remains is execution. Most men do the opposite. They roll out of bed, glance at a few headlines, and sit down with no map. They call it flexibility. It is laziness disguised as creativity. When the market begins to move, they are forced to invent a plan on the fly. Emotion fills the vacuum. Fear and greed take command. Discipline collapses before the first trade is placed. I learned early that the hardest decisions must be made in advance. Where will I enter? Where will I exit if wrong? Where will I take profit if right? These answers must be fixed before the market opens. During trading hours, my only job is to obey those answers. If I must think, I am already late. Preparation is the antidote to panic. A trader who knows his levels and limits can act without hesitation. He cuts losses because the stop was set hours ago when his mind was clear. He takes profits because the target was chosen when he felt no thrill. He does not need to guess because the plan is already built. The undisciplined trader treats each session as an adventure. He reacts to every tick as if it contains a personal message. He buys because the price feels low, sells because it feels high, and calls it intuition. In truth, he is drifting without a compass, and the market carries him where it pleases. The disciplined trader is not rigid, but he is prepared. He adjusts his plan only when the tape proves a change, not when his feelings demand it. Flexibility is not chaos. Flexibility means having a plan for multiple scenarios and following whichever one the market confirms. Chaos means having no plan at all. Before each session, I ask myself 3 questions. First, what is the trend? Second, where will the trend prove me wrong? Third, how much capital am I willing to risk to find out? The answers form my battle order. Once trading begins, I stop asking and start following. This removes the single greatest source of discipline loss, on-the-spot decision-making. Every tick invites you to second-guess yourself. Every spike tempts you to abandon the plan. But when the plan is fixed in advance, emotion has nothing to negotiate with. You either follow the order or you don't. Discipline becomes binary, yes or no, not maybe. Some traders resist preparation because it feels boring. They prefer the drama of improvisation. They call it being in the flow. But boredom is the soil in which consistency grows. The market rewards the trader who finds excitement in careful planning and quiet execution. A pilot does not wait until mid-flight to check the weather. A surgeon does not invent a procedure while the patient sleeps. Why should a trader treat his capital with less respect? Preparation also protects you from the seductive illusion of opportunity. When you arrive with a clear map, you know which trades meet your criteria and which are mere noise. You do not chase every flicker because you have already decided what is worth chasing. You trade only when the market matches the setup you prepared. Anything else is ignored. Ignoring is a discipline in itself. The ability to watch price move without taking action is a mark of a professional. The crowd equates movement with opportunity. They see a sudden rally and feel they must participate. But a disciplined trader measures every move against the plan. If the setup is absent, he does nothing. Doing nothing is often the most profitable action of the day. Consider the operator who prepares for a breakout above a key level. The stock surges in pre-market trading but never confirms on volume. The undisciplined trader buys anyway, afraid to miss the move. The disciplined trader waits. When the breakout fails and price collapses, the disciplined trader still has his capital. The other man has a loss and a lesson. Preparation also guards against the dangerous urge to average down. When you define risk in advance, you accept that a trade is either valid or not. There is no room for just a little more. You cut when the level is broken. You do not throw more soldiers into a lost battle. Averaging down is not strategy. It is an emotional plea to the market for forgiveness. The market never forgives. Discipline is not simply about avoiding loss. It is about preserving clarity. A trader who prepares sleeps better, thinks clearer, and reacts faster. He is not surprised by normal market behavior because he has already rehearsed it. He has considered the worst case and accepted it before the trade begins. Fear loses its leverage when you have already faced it in advance. This mental calm is a competitive edge invisible on any chart. The unprepared trader may occasionally score a lucky win, but luck breeds overconfidence, and overconfidence breeds ruin. Preparation breeds humility. Each night you study the tape and realize how small you are against the weight of capital. Each morning you write a plan knowing that the market owes you nothing. This humility strengthens discipline because it removes the illusion of control. You cannot control price, only your actions. That truth, accepted daily, is the heart of professional trading. Do not mistake preparation for prediction. I do not plan because I know the future. I plan because I know I don't. My plan is not a prophecy. It is a framework for action when the unexpected occurs. It allows me to respond instead of react. It gives me the power to trade probabilities instead of possibilities. Every night I ask myself, if tomorrow brings a surprise, how will I protect my capital? The answer is written into the plan. When the surprise comes, and it always comes, I follow the script while others panic. Discipline is easier when decisions are made in the cool light of preparation. The battle is won before the opening bell. Lose it there and no amount of brilliance can save you during the session. This is the third lesson. Discipline is not only the courage to cut losses or the patience to let winners run. It is the foresight to prepare so thoroughly that fear and greed have no room to bargain. Plan when the market is closed so you can act when it is open. Write the orders before the noise begins. Then, when price starts its dance, you will not be guessing. You will simply be executing a decision you have already made. Discipline is more than a trading tactic. It is the character that carries you through losses, temptations, and years of changing markets. Preparation, emotional control, and patient execution all lead to this final truth. Speculation is a business, and discipline is the only insurance policy that keeps you in business. The market will tempt you with shortcuts, challenge you with losses, reward you with sudden wins, and then test whether you can keep what you gained. Without discipline, every success is temporary. With discipline, even setbacks become fuel for long-term growth. Think of the great operators who lasted decades. They were not always the smartest men in the room. Many made spectacular mistakes. What kept them standing was their ability to return to the rules after every victory and every defeat. They treated trading like a storekeeper treats inventory. Each trade was a line item. Profits were sales, losses were expenses, and discipline was the bookkeeping that kept the doors open. No single trade could be allowed to threaten the business. This mindset turns discipline from a set of restrictions into a source of freedom. When you treat trading as a business, rules are not chains. They are the framework that protects creativity. A store owner cannot gamble the entire stock on one risky shipment. A trader cannot gamble his capital on one sure thing. The discipline of limits makes it possible to operate boldly when the time is right, because you know risk is contained. Freedom through structure, that is the paradox the crowd never understands. Most traders want excitement. They want stories to tell, dramatic wins to boast about. The market feeds this hunger with occasional windfalls that feel like genius. But excitement is the enemy of longevity. It tricks you into believing you are in control when you are merely lucky. Discipline strips away the illusion. It reminds you that every trade is a probability, not a prophecy. It demands that you protect capital before you seek profit, that you wait for confirmation before you act, that you cut losses before they grow teeth. These demands are not glamorous, but they are the reason professionals stay solvent while amateurs vanish. Discipline also means independence of thought. The crowd follows headlines, gurus, chat rooms, and social media noise. They buy because others buy, sell because others sell, and call it research. The disciplined trader listens to one source only, the market itself. Price is the ultimate truth. If price confirms your idea, act. If it contradicts your idea, step aside. No argument, no debate. Independence protects you from the most seductive trap of all, the desire to be right. Many traders would rather defend an opinion than protect their account. They marry a stock, a theory, a narrative. When the market disagrees, they double down, convinced that their intellect will outlast the tide. The market has no sympathy for pride. It rewards only those who can detach from opinion and follow action. Detachment is not coldness. It is discipline. It allows you to love the game without clinging to any single play. It allows you to close a losing trade with the same calm as taking a small profit. It allows you to watch a market rally without feeling compelled to join it. Detachment turns discipline from effort into habit. Over time, discipline shapes not just your trading, but your identity. At first, you force yourself to follow rules. Then the rules become routine. Eventually, they become who you are. You no longer fight to cut losses. You cannot imagine not cutting them. You no longer wrestle with patience. You simply wait because waiting is natural. You no longer debate whether to follow the plan. The plan is the only language you speak. This transformation is the real reward of the trading journey. Profits come and go. Markets rise and fall. The discipline you build remains. It becomes a personal asset that reaches beyond trading into every corner of life. The same habits that keep you solvent in markets, planning, patience, controlled risk, emotional steadiness, will serve you in business, relationships, and personal growth. Trading is merely the arena where these qualities are forged. Understand this, and the market becomes more than a source of income. It becomes a school of character. The tuition is paid in losses. The diploma is earned in discipline. Many will pay the tuition and drop out. A few will stay, learn, and graduate into the rare class of traders who endure. To join that class, you must accept that discipline is not a destination, but a daily practice. Every morning, the market opens and asks the same question: will you follow your rules today? Not yesterday, not tomorrow, today. The answer must be yes, trade after trade, session after session, year after year. One lapse can erase months of careful work. One undisciplined trade can undo 100 disciplined ones. This reality is harsh, but it is also liberating. It means success is always within reach because it depends on behavior, not prediction. You do not need to know the future. You need only to control yourself in the present. Let others chase forecasts and magic indicators. Let them argue about the economy, the Fed, the next big stock. Your job is simpler and harder. Protect capital, wait for proof, execute without hesitation, review without ego. Do this, and the market cannot defeat you, because the market can only take what you willingly risk. Discipline decides that risk. It is the final gatekeeper between you and ruin. Guard it as fiercely as you guard your capital, for in truth, they are one and the same. Capital without discipline will disappear. Discipline without capital will rebuild capital again and again. Choose which you would rather lose. The crowd will continue to trade on impulse, chasing noise and excitement. They will donate their money to the market in exchange for entertainment. Let them. Your task is different. Build habits so strong that discipline becomes instinct. Live a life that supports those habits. Trade only when the market confirms your plan. Cut losses without delay. Let winners run with patience. Prepare when the market is closed. Execute when it is open. Review when the day is done. Repeat tomorrow. This is not glamorous. It is not dramatic. It is simply the path that leads to survival, and survival is the prerequisite for every fortune ever made on the street. Follow this path, and you may not feel like a hero, but you will remain a trader long after the crowd has gone broke. In the end, that quiet endurance is the greatest victory the market can offer.